Hi everybody, Alex Deploy here from Expert Forex, and in today's video we're going to look at the need to demo test any account linking service for 10 trades at least. Now, we regularly get emails where the client says, I am so happy with this linking service, but the only thing is you are reporting a return of 50% a month and I'm only getting a return of 30% a month. What am I doing wrong? So this video addresses that question. Now, in our welcoming letter, and in fact you can see this letter before you even join the linking service, there is a link on the main marketing page. Click on that and you'll see, and it suggests a way of setting up for the linking service. And step one is creating demo accounts to test the service. It is important to test the service on demo accounts before using live accounts. Ideally, you should use demo accounts of the broker you intend using for the live service. During this period, basic factors like different instrument codes, slippage, loss alignment, etc. can be evaluated. So very important, don't just jump in and trade live accounts when joining the service. You need to demo trade, and as I say, at least 10 transactions. Now here's a video, and a link to this video will be in the description of this particular video and in the first commentary of this video. And this video I made last year where I explained how the linking service, how your broker, your trading platform, the copier's broker and the copier's platform relate to each other and why slippage can occur. I also go into other reasons for slippage, and there's different prices, different spreads, times of transmission. There could even be weekend closes. One broker closes at 9 o'clock and the other one at 8 o'clock, and so on. So there's lots of reasons why there's slippage, and those are some of the reasons why you should test your service. So here's a basic way of testing your service. So what you would do is you'd put a signal provider on a demo account and you'd let it run for 10 closed transactions. So then you'd look at those 10 transactions, you'll look at the profit made by the signal provider on those 10 transactions, and then you'll look at your own account on the identical transactions. How much profit did you make? And I've got a column here for if you were, for instance, using that same linking service for, instead of a $10,000 account, you're using it for a $1,000 account. That's what a lot of people do. Then what you'd have to do is convert your results to a $10,000 account by multiplying by 10. That's just an example. But essentially you want to get to a situation where you're comparing apples with apples. And in this example, the signal provider has made $435 profit and you have only made $372 profit. Now this is very important information, because it is really bad if you wake up 2 months or even 3 months later and say, you know what, I've enjoyed the service, but somehow I can't get the same results. And there are many reasons why you're not getting the same results, but you need to be aware of the fact that you aren't making the same results. Some traders, in fact, do better because of their spreads being smaller and many other factors. So it's not only negative slippage that happens, but also positive slippage, and that is also to your advantage. So from the table, you can see that the signal provider is enjoying a 16% better result than you are. Now, there are lots of reasons for this, but the short answer to fix that problem is to increase your lot sizing factor by 16%. So if it is 1 right now, all you do is you increase it to 1.16, and then your results will align with your signal provider. So that adjustment will cover things like slippage and other reasons why there is a misalignment between you and the signal provider. And then the other answer is to investigate the difference in a little bit more detail. If this difference, the 16%, is too big for you, you need to have a look at what kind of spreads your broker is charging compared to the signal provider, and other areas where there might be timing differences, where there's a big delay between the signal provider sending the signal and you receiving the signal, and there's many reasons for that, and so on. So you need to do this exercise to quantify your exposure to slippage before you trade live accounts, because you can see this is a mild example. Some slippage can be a lot higher. So please, if you're joining this service, really pay attention to this exercise. And I hope you've enjoyed this video, and I hope you've learned something about being cautious when you trade the Forex market. Don't take things for granted. Test strategies and quantify differences between what you expect to earn and what you're actually earning. Now, as I said earlier, any links to items mentioned in this video will be in the description of the video, as well as in the first commentary. So from me, Alex Deploy, cheerio.